You're watching the Weekly Wrap. I'm Jessica Amir, a market analyst with Bell Direct. Well, this week, the Australian share market gained 5.3% from Monday to Thursday. And on Thursday, the ASX 200 closed off the month up 8.8%. That's the best monthly gain on record since the dataset began in 1993, while the All Ordinaries rose 9.5%, clocking its best monthly gain since 1988. While smaller companies outperformed, with the ASX 200 Small Ordinaries up 14%. Now, markets rallied for three key reasons. Number one, the University of Queensland passed further COVID-19 vaccine milestones and could have a treatment ready later this year or early next year. Secondly, the Australian Cabinet is tipped to begin talks to lift sport and restaurant lockdowns. And lastly, over in the US, the company Gilead, their trial has cured 50% of patients with severe coronavirus from their trial. And lastly, the US also pledged to keep interest rates near zero to help the American economy. Now, looking at our sectors this week, energy, IT, consumer discretionary rose the most, while conservative defensive sectors continued to underperform. Australia's biggest car dealer, AP Eagers, rallied up the most, 46%, after announcing $6 million a month in savings after axing 1,200 workers, while it also anchored $122 million in funding. Now, despite this week's share price charge for AP Eagers, it's still down 50% this year. On the other side, ResMed fell the most this week, 6%. However, it managed to hold on to its year-to-date gain of 7%. And RMD shares have been consistently growing for 9 straight years. Now, in the industry, Credit Suisse has warned that ventilator manufacturers could be at risk of oversupplying the market as they ramp up production to keep up with COVID-19. But Credit Suisse forecasts ResMed's third quarter earnings could grow 6%, and their EBIT could grow 10%. The bank also raised RMD's price target 2% to $25.50. That's higher than its close price on Thursday of $23.40. So what did I mean when I said we re-entered bull territory? Well, after the ASX 200's record gain in April, the market has charged up 22% from its March lows, which is the bottom blue line. So we're now only 23% off the February all-time high, as you can see from the top blue line. This seems to be a real pivotal point that's got investors divided, not knowing if markets will move higher or lower. So I look back at the GFC to see what happens when the ASX 200 had a rally of over 20% in a bear market. Now, the only time, as you can see, that the market sustained a rise of over 20% was when the market started to recover out of the GFC. So the question is, do you think that we can sustain this 20% rally and move higher? Have we seen the bottom? Well, I think there's 3 key points to think about. 1, the depth and duration of the pandemic is still far from clear. Secondly, the fundamentals suggest growth and cyclical companies' balance sheets could be exposed to further downside. And thirdly, on the upside, you would expect those companies with strong cash flows, low debt to stick to their guns and fire higher and remain on track to pay dividends. And now for some final stock ideas. Well, Bell Potter has put together a list of 10 recovery stocks for the other side of COVID-19, all of which have strong balance sheets and are rated as a buy. And they include Aristocrat, ALL, ANZ Banking Group, Macquarie Group, MQG, Premier Investments, PMV, Flight Centre Travel, FLT, Qantas, QAN, Mirvac, MGR, BHP, Worley Parsons, WOR, and Origin Energy, ORG. Thanks so much for your company this week from all of us here at Bell Direct. I'm Jessica Amir. Stay safe and happy trading.